Just really interesting as to the power of these ETFs and where these flows are coming from. Bitcoin ETFs account for about 75% of new investments. So if you're wondering where this Bitcoin pump is coming from, and Mike, I think Dave Weisberger pointed it out to us on Monday when we spoke, this is not leverage. This is spot buying, forced spot buying by ETF issuers for people who are buying shares and they need to buy Bitcoin to fill it. I mean, that's what this is, 75% of it. So yes, that may slow, but this is a demand dynamic that we have never seen in this market. I'm not doing, guys, I'm not doing that this time is different thing. I'm not saying we're going to 500,000 next week. I'm saying that there's a legitimate buying demand that is yet to cease at the moment in this market that has not been there before.
In recent days, Bitcoin has experienced a significant increase in value, largely due to heightened investments in Bitcoin exchange-traded funds. This surge in ETF activity has caught the attention of investors and analysts alike. During a recent discussion on Market Mavericks, the bullish sentiment surrounding Bitcoin can be seen as expert analysts Mike McGlone and Scott Melker go over recent charts on Bitcoin's movement. Bitcoin's value saw a notable spike following the approval of ETFs, with prices reaching $49,000. The strength of Bitcoin's performance stands out, especially when compared to traditional assets like stocks. Major financial institutions like BlackRock and Fidelity have witnessed substantial inflows into Bitcoin ETFs, contributing to the overall increase in the market. The collective value of Bitcoin ETFs now stands at $37 billion, reflecting both the rise in Bitcoin's intrinsic worth and the growing enthusiasm for cryptocurrency investment opportunities. Melker suggests that the influx of retail attention and mainstream media coverage typically follows significant price increases in Bitcoin. However, this surge in interest might not be sustained at the same pace indefinitely. He implies that as Bitcoin's price continues to rise, there might be a gradual slowdown in the rate of new investors entering the market or media attention directed towards Bitcoin. This slowdown could occur as the initial excitement wanes or as potential investors become more cautious or skeptical due to the heightened prices. Let's take a look at clips of Scott Melker and Mike McGlone as they explain this possibility and the current situation of Bitcoin. We kindly request your support while we view these clips. Please consider giving us a thumbs up, leaving a comment, and subscribing to our channel. Your interaction encourages us to continue sharing cryptocurrency finance news with everyone. We hope you liked the video.
We talked about on this show, actually, Gareth, quite a few times, this wick up on the ETF approval that moved to 49,000, how that popped right into that golden pocket through this resistance here at about 48,240. That's that 61.8% retracement that you saw in every single cycle, right? You have these 4-year cycles of Bitcoin, you get this big move down, 80%, whatever it is, and you always get that 61.8% retrace. Well, now we're pushing through that, right? We'll see where the weekly closes, but now we're through the golden pocket, continuing to head up. This thing is showing tremendous divergent strength. I think even though stocks are looking strong, I'm sure Mike will say that it's high beta, which may very well be the case. But I just find it very hard to fade this when things are looking this good. Just a really, really powerful move. And you look at the ETFs. I mean, you're talking about this is a screener for the ETFs, $5.7 billion in BlackRock already, $3.99 billion in Fidelity already. Now GBTC back up to $24 billion after going down to around 2021. Total market cap, $37 billion-ish. Of course, guys, to be clear, a lot of this has to do with the price going up. Right, that doesn't mean there's more Bitcoin in there for GBTC. It means the value of them is higher, but still just tremendously successful here. I think near term they'll slow. The question I think then becomes: do higher prices beget higher prices? Right? We all know in any asset, but certainly in crypto, people start to get really interested when the price goes up. Like you see the Drake meme where he's got his head and then he's like this. Hates it, loves it. Well, you hated it at 16K, you love it at 50K. Right. And we all know that that's the case here with Bitcoin. So the question is, how much retail attention will this draw? How much media mainstream attention will 50,000 headline or 60,000 headline? What are those going to do to sort of continue to raise prices? Because we know as far as inflows, they could slow in the short term, but these products are not even available to the bulk of RIA platforms, to the bulk of institutions. It takes 3 to 6 months for them to even vet them and decide whether to list them. So what could potentially come? We're only seeing a small fraction of it so far. Just really interesting as to the power of these ETFs and where these flows are coming from. Bitcoin ETFs account for about 75% of new investments. So if you're wondering where this Bitcoin pump is coming from, and Mike, I think Dave Weisberger pointed it out to us on Monday when we spoke, This is not leverage. This is spot buying, forced spot buying by ETF issuers for people who are buying shares and they need to buy Bitcoin to fill it.
Yeah.
I mean, that's what this is, 75% of it. So yes, that may slow, but this is a demand dynamic that we have never seen in this market.
Right,
I'm not, guys, I'm not doing that this time is different thing. I'm not saying we're going to 500,000 next week. I'm saying that there's a legitimate buying demand that is yet to cease at the moment in this market that has not been there before.
All right, everybody's interested. I get the questions a lot. So, and to back you up, what you said, Scott, the inflows are happening. We all know the havings. Having we all know in the big picture, it's just a very bullish background, just declining demand and increasing demand and diminishing supply. But what I saw there, I thought was quite striking. And his quote, we had lunch again, and the thing we both agree on is all commodities have the high price cure. That's the problem right now. It's part of the reason I'm bearish. I think more deflation's coming. That's why I'm bullish. Things like TLT and bond yields go down. But Bitcoin does not have the high price cure. You cannot create more of it. I mean, obviously there's other things you can sell and anything, and gold is the only one that's even close. So my takeaway from that event was, yes, this price is justified. Can't fight the tape. But the key thing that really cautious me, and Scott, you touched on, is both Bitcoin and the S&P 500 have a 5 handle on them. I mean, they're all still, at some point, I think we're already seeing some of that divergent strength, where if we can see the S&P 500 at some point, it's going to fill that gap at 4,600. We have a decade of trading. It's never left a gap like that. It's a question how it does, and it's a question how Bitcoin reacts. And it's a trade for all you, which I try to stay away from because I used to try to trade. But we are seeing that signs of people selling. And this is what selling gold, ETFs, gold ETF gold outflows remain, or the main gold ETF ETFs remain in outflows. And people are selling stocks and gold to buy Bitcoin.
As Bitcoin ETFs continue to attract significant inflows and gain popularity among investors, there is a risk that these assets could become overvalued, similar to what is observed in traditional markets like stocks. Additionally, if liquidity becomes constrained in the broader financial markets, it could impact the ability of Bitcoin ETFs to sustain their valuation or provide support during market downturns. Mike McGlone notes that the Bitcoin-gold ratio is breaking out and catching up with the S&P 500, indicating a significant shift. McGlone believes this trend could lead to a reassessment of prices by the end of the year, suggesting that current prices may be seen as excessive in hindsight. McGlone predicts a potential pullback in the stock market and emphasizes the importance of observing market signals to make informed decisions. Let's look at more clips of McGlone as he explains this.
So sometimes what I enjoy in this business, sometimes in particular what you said, is the response you get from people. When you get complete abhorrence, or people who completely disagree with it's just a little view or trade you express, you know you're usually going to be right. Yeah. It's so funny. It's like, and then you know their position. And it's just so entertaining. And that's what I'm really concerned about since the launch of the ETFs. It's just so overwhelmingly bullish. That's when I have to pull back and be careful. I've mentioned that, but that's what I show you in this chart is can't fight what's happening. What I've been concerned about is Bitcoin gold ratio is breaking out. The problem is it's catching up the S&P 500. It's not leading. It depends on how you measure it. Obviously, I go back to kind of 2019. But what's significant lately is you see that's really happening. And I think it's going to really matter by the end of this year. We're going to look back and say, yeah, prices were a little silly, and I'm starting with risk assets. Bitcoin is just among the riskiest. And as what you see here is this gap open in the S&P minis. Once we hit that gap, that's when we had a peak in Fed rate cut expectation. Now, this is just S&P 500. No, sorry, this is the Fed funds in 1 year. What market expects in 1 year? Going down meaning taking out the rate cuts. The point is there's that cat and mouse game, and I think it still goes back to what we talked about a lot in the show. A lot of professional money managers realize Bitcoin thrives on everything thrives on liquidity, and what this shows there's a higher risk assets go S&P 500, the less liquidity you should expect to come help save you, and that's why I'm still sticking with this. I think we're going to just get a normal little pullback in the stock market, and then we'll see how everything pans out. So I'll end with this: when the S&P 500 did this gap right here, Bitcoin was around 43,000. Let's see what happens. And of course, I might look back and say, McGlone, you're an idiot. And first time in a decade, it didn't feel it. I'm sorry, first time in a quarter century, it didn't feel it. But hey, you got to go with the signals that work and can make money. I'll publish on that tomorrow. I still think if I'm right about this normal asset correction, that there's a good potential gold will outperform Bitcoin. I've been wrong this year, but it's you can clearly see there has been outflows. Gold ETF holdings are still heading lower, and we know what's happening with Bitcoin ETF flows. But again, it's partly because beta is going up. And then I want to show you the key thing that's happening in gold is in white. This is exchange traded fund total holdings in ounces. And what I messed up before is there's complete outflows. We never had met much of outflows with the gold price still going up. And why is there outflows? Well, the stock market's going up and you're getting 5%. And who's buying gold? The deepest pockets on the planet, the central banks. So one thing I want to point out is, to me, gold is on more sounder footings than it was at the onset of 2008, which it did have a 30% correction when everything collapsed and then went up. Remember, I was very long anything but the stock market then because I was just trying to hedge. One of those people was like Michael Burry. It was a little bit early. But the key thing that's what's sounder footings is you look at the gold, the S&P ratio, it's significant discounted now. Gold is so cheap versus S&P 500.
One key takeaway from Melker and McGlone's analysis is the need to remain cautious amid the bullish sentiment surrounding Bitcoin. While the market may seem promising, it's essential to recognize potential pitfalls and uncertainties that could impact Bitcoin's future performance. McGlone reminds us of the importance of observing market signals, such as the Bitcoin-gold ratio and liquidity trends, to make informed investment decisions. He advises against giving in to the temptation of FOMO and emphasizes the importance of maintaining a level-headed approach to investing. While it's natural to be attracted to the chance of quick gains, rushing into investments without careful planning can lead to unintended consequences. Instead, investors should adopt a disciplined and patient mindset, focusing on the long-term fundamentals of Bitcoin rather than short-term price movements. Just a few days ago, Bitcoin surged past $50,000, suggesting optimism for a positive trend in 2024. The approval of Bitcoin ETFs has increased demand from institutions, and the upcoming halving event in April 2024 is expected to reduce supply even more. With over $2.8 billion flowing into spot Bitcoin ETFs within a month, 2024 might see Bitcoin leading a broader crypto bull market due to supply-demand dynamics and ETF approvals. Although the promise of making money can be tempting, and while we remain bullish on the long-term performance of Bitcoin, it's important to be careful and thoughtful when entering the market. By listening to experienced analysts like Mike McGlone and Scott Melker, and staying updated with news on finance, investors can make smarter choices and protect their investments in the constantly changing world of cryptocurrency. What are your thoughts on the recent surge in Bitcoin's value and the impact of ETFs on the cryptocurrency market? Let us know in the comment section. If you found this content valuable, don't forget to give us a thumbs up, leave a comment with your thoughts, and subscribe to our channel for more informative updates on Bitcoin and other cryptocurrencies. Your engagement helps us continue to bring you quality content and stay up to date with the latest trends in the crypto space. Stay tuned for more analysis, discussions, and insights from industry experts. Until next time, happy investing.